This is Damon Stevens. Vanilla Builders Day is Wednesday, June 15th, 2022. The stock market update for trades of the day. And the Fed's raised interest rate up 0.75%, which is what was expected. And it was a good thing that they did that. Otherwise, I think the market would have had a down day instead of an up day. So we did end green. So now the question is, are we going to rally from here? Is everything good? And I would have said yes until I saw the closing prices. And then I'm not quite sure yet. We'll get into it as we get into the charts, but interesting closing prices, how they closed down just a fraction below what would be the next breakout pricing. So I think it's yet to be seen. I think we got to wait for the rest of this week to kind of see how things play out and how they digest the information. But it's possible we could get some rally out of here, but I don't know that we're out of that bear market yet. I still think we can come down and test those lows again, especially since we put new lows in and they've not been retested. So let's get right into it. Take a look at what's going on, see what we can do for prepare tomorrow. All right, so here Dow Jones closed up 1%, NASDAQ up 2.5%, and S&P 500 up 1.46%. You can see energy, all the money was flowing in energy. Now the money's been flowing out of energy, at least today, into our FANG stocks, which did really well. The tech stocks really performed well, and over across the board. I mean, pretty much green across the board, except for the energy area. So that rotations happens, and is normal to see. Looking at the scanner, SIDU hit the scanner. I did not catch this one. I did not watch this one. I was watching all the FANG stocks and the larger stocks, and really waiting for the meeting results. So I totally missed this SIDU, but one stock that did continue to perform for us, and that is AERC. AERC, we talked about this last night, that this thing could just roar up to new highs. And you can see here, hit our trend line back last week, hit it again on Monday, and hit it again and blew through it, actually through our trend line here into 2361. And let me just show you on a larger chart here. So this is on a weekly chart. So the high price of AERC is $117. And so you can see here that there's a few candles here. One kind of up here, $74. One here is 81.92. So we're down here at 1885, making a new high. So definitely gonna keep this one on our list. Boy, if we got a short squeeze going on here at some point, this could really squeeze up and give us a good price. So we're going to keep that on our radar every morning. Check this pre-market and throughout the day. So AERC remains on our short list. On the list of news today, so coming up here Thursday, jobless claims could have an impact on continue to impact the response that the market has, as well as on Friday. We have Jerome Powell speaking and talking about also industrial production index. So there's still some things that could happen that would, obviously could affect the market and how it adjusts or how it reacts the rest of this week. So just something to keep in mind. Looking at, live right now, ES1. So we're above the closing price. You see that we're kind of going up towards the highs. We kind of blew through our deviation bands here, but you notice we came right back in. And I came back towards this middle line. And we also blew through this one down here as well. So wide swings. When that news came out, look at this candle. It's 37, 23, 50, clear up to 28, 25, one candle, 15 minutes. So you can see there's some wide swings and some crazy stuff going on with these Feds when they even made their announcement. But you see here, we're right, just hugging this first deviation band right here. So we'll see kind of how we open up tomorrow. But right now, market looks like it's going to open up positive tomorrow as well. Looking at Google, you see here that Google had a nice run up here. So it's in here right between the 20 and this support line that we were at. Amazon, again, nice little run up here. And you can see that we're kind of filling in this gap that we have here. So, do we continue to rally up and fill gaps? It's possible, but we got to kind of see what happens over the next couple of days as we digest this information. Same with Apple. Apple's running up here. It looks like it's working to clean that gap up. So we'll see if we can fill that entire gap tomorrow. So it could be a nice update tomorrow. Just be careful that we're not bullish. We're not above the 20-day moving average. We're not curling up. So we are still in a bear market. So keep that in mind. Nvidia filling a little bit of the gap as well. At the end of the day, Facebook didn't even make it through the candle. So we're not even above the candle. We're just barely above this 169. So 176 would be the next resistance area. So Meta kind of struggling there. Tesla, this is what I'm talking about here. So Tesla, to break out to new levels, it needs to hold above 700, and it stopped at 699. And then after hours, the stock hung out at 699.99. It would not go to 700 after spiking up there and then coming back and closing the price below 700. That's the kind of thing I'm talking about. The market does some funny things where, if there's some psychological number like a 700, and it does not want to, rally from 700, it'll go ahead and close out below that 700 number and kind of hold down the pricing. So I just thought that was interesting. Kind of give me a clue that, maybe maybe the market wants Tesla to kind of hang out in this area. We'll see in the morning. It could totally break out. You hit the 20-day moving average, and we could just rock and roll. But we got to get above that 700 mark to run. RK sitting in this channel, closing some of that gap up today. U.S. oil pull back here. We're sitting on the 20 though, so that's good support. If you haven't subscribed, definitely subscribe. Definitely like our videos, and we continue to bring this content to you. Just a great community we're trying to put together here. There's a free Discord. If you go to finwealthlive.com, there's a link to free Discord as well as some free training. So definitely join us. Looking at the dollar pulled back a little bit. That's helpful for us in the marketplace. So it's great that we kind of pulled back in here, and we're kind of back in this range here. And I don't know if this is going to make a little cup and handle or what this is going to do here. So we got a nice cup formed here. So we'll see what kind of happens over the next couple of days. Gold, obviously with the dollar pulling back and the market rallying, gold was able to pull up back above 831.65, which is our now support line. So hopefully we can start to rally back up towards these highs again and climb the rest of this candle here. SPY, we didn't quite get above. That's what I'm talking about too. The SPY 37.90. So 37.80 kind of is where we need to get above 80.54 to kind of rally up, and it rallied up past there, and then pull down just to make sure it could close underneath 380. So that's what I'm talking about. Just some weird things that the market does sometimes when it's getting to its closing price. It's almost like it's sending you a message saying, we're not ready yet. But we did fill some of the gap in. We did gap above that. So we'll see if we can break 380 tomorrow and have a nice little rally and close some more of this gap, or if we're just going to hang out down here at the lows. Triple Qs, you see here we did get above the resistance line, and we're holding above there. We're above that 280, so we'll see if we can rally from here. But definitely filling some of that gap in as well. Semiconductors, again, we've got above that resistance line, so it's great. But look at, we're sandwiched right here. We're trying to fill that gap right there. No more, no less. So as long as we don't break back down below 215.22, down in these lows, we should start to try to fill that gap in. IWM, inside this candle, we got to get above this candle if we want to start filling this gap. So right now, inside the candle is weak in my mind. So we could kind of, chop in here and not make much progress tomorrow. So we'll see what happens. So just look at that. Top of that candle is where we got to get above. Looking at the financials, XLF, you can see here, again, we didn't even make it above this candle. So we got to break this candle here at 31.85. We got to break this candle here at 32 and get back above our resistance line here at 32.23. You can see where that came from. XLV healthcare, right within this candle. So right between these two candles, we need to really climb this candle if we want to start to rally up here. So we got to get above this 121.75 area. Energy sector pulling back, spiked down below, or down through our second line there, deviation band, but it's settled on the 50. So we'll see if we can bounce, off of here, or if we come lower. If we do break this line here, 80.52, we could be coming down here to the 100. So definitely energy is taking a little bit of a break here, and you can see, at least right now, still within our deviation. Bitcoin, low as well. It spiked down here, actually low towards the 20,000 mark, and then pop back up here. But sitting here flat, we'll see, Bitcoin's got some work to do to get rallying back up here. And Ethereum, same thing, a little spike down, right down towards, I thought we were going to hit 1,000. We hit 1,012. And we're back up a little bit. So we'll see if we can hold that, or if we continue to break down, but we're still above this deviation line here on our closes. So that's our stocks, our cryptos. What we're looking at in the morning, definitely need to be above yesterday's close, or today's close actually, to rally up here tomorrow. If we gap above, then we may come back down to fill the gap that we make in the morning to yesterday's close, and then bounce off there. If we are below the numbers, then obviously that's another sign that the bears are still wanting to play. That's why they kept us down and not let us close above some key support levels, and that way they stay resistance. And we could have come back down and retest the lows again, possibly, if that happens. So definitely watch the price action in the morning. Watch the VIX. VIX has got to stay low if we want to rally. If the VIX is remaining above 30 and especially 25, then we could still have some pullbacks in the market. So stay safe out there. We'll talk tomorrow night, see how the trades went, and plan out our next day. Everybody have a great night.